My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to a special San Francisco edition of Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to help you make some money. My job is not just to entertain, but to explain. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. You get some positive earnings. You get some good inflation numbers. Then suddenly you end up with a fantastic day for the bulls. Dow surging 703 points. S&P jumping 1.83%. The NASDAQ pole vaulting 2.45%. Lately, there have been a lot of days where I have to come out here and explain how the hidden boogeyman of the bond market crushed stocks. Other days, I have to explain to you the concept of beat and raise, how stocks don't go up just because companies beat the earnings estimates. They have to raise their forecasts, too. But then there are those rare days. Rare, perfect days when it all comes together. And we try to figure out why this can't happen all of the time. So let's go over what really happened today and why stocks roared. First, for 2 months, we heard that inflation's raging. But when we got the consumer price index numbers this morning, they were fine. Not perfect, 3.2% core inflation. But there were so many people betting that the inflation numbers would be horrific, leading to rising bond yields, falling stocks, that it was almost a gimme when we got an inline inflation reading. You could see it coming. When everyone's expecting an overheated number, a basically inline one equals success. As an aside, no one doubts that inflation's too high. 3.2% for core inflation is still about a point higher than we're willing to live with. You could argue that inflation is what decided this election. Normally, when you get 4% unemployment, the stock market had a big doesn't move, but the incumbent's unbeatable, right? But people really hate inflation. It's what crushed Gerald Ford. It's what crushed Jimmy Carter. I don't want to talk politics, but when I saw this morning's earnings, and more important, when I talked to the executives who run the institutions that reported today, the banks, there was a palpable sense of optimism about the future, even among those whom I know lean Democratic. I heard a lot of horror stories today about how the Biden administration is so hardcore anti-business, and that attitude won't miss it. Just today, we got news of restrictions on high-end semiconductors. Yes, yet again. And then another surprise to the industry that deserves better. And we got restrictions on some biotech equipment sold to China. Thank you. I come back and say, what the heck? The clock is ticking, people, and you guys keep throwing incoherent monkey wrenches at business people who've tried hard to play by the rules, which keep changing. They've got less than a week left, and they're still pulling this stuff. I don't think there's anyone on TV that is tougher on China than I am. But I'm not going to throttle our companies with lists of who can and who can't get large amounts of advanced semis. We don't do that in this country. We don't pick favorites and tell Jensen Huang, who is the CEO of NVIDIA, here are your countries you can do big businesses, and here are the ones you can't. Just so wrong. Just palpably painful and totally off the reservation. But given that this should be a day of celebration of the ownership of equities, I want to take a moment to talk about all the obstacles you had to clear in order to get to this point, where you could profit from owning stocks on a great day like this one. First, for months, the whole conversation about this market wasn't talking about stocks. It was talking about dominated by the bond market and the Fed. But whenever you focus exclusively on what we call macro, you're presuming that CEOs are nothing but statues waiting to get hit, getting torn asunder by powerful forces they can't control. And that, my friends, is dead wrong, as we saw from the banks today. The smart ones can make a ton of money in this environment. So I want to urge you not to focus on the Fed head gas bags or the economists who prattle on endlessly about how many rate cuts we might get this year or not. That is a total abstraction. As long as the Fed generally wants rates to go lower, you're fine. The details are not important. It's easy to shoot your mouth off about this stuff, but it doesn't necessarily help anyone making good investing decisions, which is what we do on Mad Money. Stop being scared by them. They are not there to help you. They are not there to help you make money. Second, profits can make a lot of things work. Respect strong profits as they turn into higher stock prices. Third, you may think that the market has thrived under Biden, but much of that strength came from the Magnificent Seven. And the real issue that perplexes the American people is how much more everything costs than it did 4 years ago. If we can finally beat or roll back inflation, then ordinary people will be as optimistic as the CEOs are now under a president who likes to talk to CEOs to see what's going on. Hey, say what you want about this President-elect Trump. He's not afraid of a photo op with a farmer or a tech or a fossil fuel CEO. No, he don't mind. CEOs, come on in here. Let's go like this. So put it all together. And you can see that the optimism is indeed contagious. I've been on so many bank conference calls where we've had positive earnings, but then a downbeat view of the future. Didn't happen this time, which is why you got some tremendous follow-through in their stocks. And that follow-through may not be over. Remember this. The people who chatter endlessly about interest rates today are not your friend. They can shake anyone's confidence. Instead, you got to keep your eye on the prize, how management's doing, the profits they're ringing up, and the belief that you can spend money to make money. If you were focused on anything else, your money would have been withering in a CD today. Do you know there's really only a couple of great days like this one in any given period of time? If you're scared out of the stock market, if someone told you to get out now, and you listen to them, especially because of the Fed, I can't help you. Here's the bottom line. All the big gains for the market happen on a handful of days around here. This was one of those days, and I sure hope you got a piece of it. Let's take calls. Let's go to Tyler in California. Tyler.
Hey, Big Booyah from California. How you doing, Jim?
Man, you're down the block from me. I'll be there in a snap. What's happening?
Speaking of Snap, what's your take on Snapchat with the looming ban of TikTok coming?
Well, I sure didn't mean to mention Snap in the same breath as Snap. You want to do there are so many more companies that are better prepared for this. I'm telling you, I would even go with Meta. And by the way, he's jacked and he's got the guns and it's really terrific. I watched that on the Joe Rogan show. So he's got every box checked. I say go with Meta. I want to speak to Cheryl in Louisiana. Cheryl.
Jim, hi. I want to thank you and your staff for educating all of us about investing. Your lessons have helped me to become financially independent.
That's what I want. That's why we do the show for 19 years. Thank you, Cheryl.
I love it. My question today is about Coterra, a stock that you like in the natural gas arena. It currently makes up about 10% of my portfolio. Last week on Squawk Box, you said you think that nat gas will go down to about $2 this year. But currently, Coterra is doing well with nat gas at approximately $4. How do you reconcile that, and what is your recommendation? Should I hold or trim my position?
Yeah, you got to hold Coterra. Big position for portfolio for the travel stocks. Why I just said it could go down is because there could be a lot of people who drill, and it's going to be a very helpful regime to fossil, so it might drive the price down. But you're right. It's making a ton of money right now, and it's hit a 52-week high. Look, most of the market's gains come from a handful of days, and today was one of those days. I hope you were able to take part in it. On Made Money Tonight, I'm rounding out my time on the West Coast with another slate of exclusives you do not want to miss, from utilities to tech. I'm checking in with CEOs at Cisco, Arm Holdings, and PG&E. Plus, I'm hearing from the new mayor of San Francisco, Daniel Lurie, so I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.